This is going to be a boot camp that is going to give you strict, straight answers and very blunt answers on the questions that you want answered, which is how to find the best stocks, how to be able to find a breakout, how to be able to short a play, what to know what to look for, what are the best indicators, what are the best time frames, how do I know if a stock is going to be profitable, how do I know out of 8,000 different options which is the best play. We're going to be going over all of that. But what you need to understand throughout this boot camp is we do have to start at the bottom. We have to start as building this foundation. Whenever we do these boot camps, I always like to begin with a little bit of a thought. And that thought is, let's imagine we are building a skyscraper. And this skyscraper is going to be the knowledge that you are going to be learning. We can't just go straight to the penthouse of the top floor with the marble floors with the amazing view. Because if you just go straight to the top floor and you don't have anything underneath you, well, you're just going to crash right on down. So the first day, 2, 3, 4, we need to build that foundation. And that foundation of learning the basics. That foundation of really understanding how the stock market works. And then we can build off of that and get to floor 1, 2, 10, 20, 100. And we can keep going more and more advanced. But we can't just jump straight to advanced. Let's build that foundation first and let's learn how the stock market truly works. So, let's talk about expectations first off. Throughout this boot camp, I want you taking notes. I want you pushing yourself. I want you saying to yourself, I'm going to take this time and I'm going to dedicate this time to become the best stock trader I can. I am not here to waste your time in any sort of way. If you are watching this right now at this moment, I want to make sure that you leave this boot camp getting absolutely everything you want. Take notes and put in the work. The more you put in, the more you're going to get out of it. Don't just sit here, go get a sandwich halfway through, come back and expect to be able to take your trading to the next level. I want you to be able to really dive in and focus and say to yourself, all right, I want to make the most out of this. Feel free to ask questions. Every single day you guys can ask me questions, especially if I talk about something that you're still a little confused about. Make sure you guys reach out to me. And it's okay to feel overwhelmed at times. That's what so many traders get nervous of. They say, I feel overwhelmed. Deck, this is so much information. Well, it's okay. You know why? It's just like if you guys are doing fitness. Let's say you go to the gym and you start benching. Let's say you go to the gym and you start curling. Let's say you go to the gym and you start doing squats. The next day, your legs hurt. Your chest hurts. Your arms hurt. Does that mean you're quit? No, that means you're putting your arms and your chest and your legs through things that they're not used to, and they're going to grow from that. If you're again sitting and you're saying to yourself, man, I'm overwhelmed with expectations. I'm overwhelmed with information. I'm overwhelmed with this education. That's basically like you are now growing. Your brain is getting more knowledge. It might be a little sore, but the thing is, that's because you're gaining more information on it. I would rather have you overwhelmed than underwhelmed where you're saying, I wish I knew more. So, pushing yourself is great, and it's going to be able to help you understand the market even better. So, today's day 1. I know what it takes to be successful. And we are going to just start with this right out of the gates. This is what it is going to take to be successful in the stock market. We all want to just sign up. We all want to open up a Robinhood account and we all want to start making money right away. But that's not how it works. I'm here to be honest with you. Every single person here needs to paper trade for at least 3 months before going live. Deck, what's paper trading? Paper trading is essentially fake trading. It's where you have fake money and you trade in the stock market off the real-time stock market. If you cannot grow a paper trading account, why do you think you could be able to grow a real account? I see that happen all the time. People say, hey, have you ever again paper traded? People say, yeah, I paper traded for about like 2 weeks or so. How'd you do? Won a little, lost a little. And it's like, well, why are we trading real money? Why are we trading real money after only paper trading for 2 weeks? That makes no sense. You'll hear me talk about this a lot, but I always think about it as in being an airline pilot or being a fighter jet pilot. Imagine if all of a sudden you're about to launch out of a fighter jet and someone comes up to you and says, do you know how to fly this thing? And you go, I was in the simulator for about 2 weeks. You know, how'd you do in the simulator? Some of them I landed well, some of them I ended up crashing. Hey, but I'm ready to take off. That's not good. That's not good in any sort of way. That's awful. Think about your stock trading as being a fighter, a pilot, as being a professional athlete, anything along these lines. If you want to be a lawyer, how long do you have to go to school for? 8 years. If you want to be a doctor, how long do you have to go to school for? 8 years. If you want to be a teacher, how long do you have to go to school for? 4 years. Where is it lost down the line that we believe that we can basically beat Wall Street within a week of paper trading? It makes no sense. It makes no sense whatsoever. You ever hear the statistic of 80, 90% of stock traders lose? It's because no one puts in the work. 10% of people will put in the work. 10% of people will strive. 10 to 15% of people will know what it takes. But I'm going to say 60% of that 80% that fail are probably just, hey, let me again open up $1,000 in my account. Oh, I lost it. Okay, I'm done with this. That's where the statistic comes from. It's just people who don't ever put in any sort of work. If you want to be a professional athlete and you want to play in the NFL, what does that take? Does that take you just saying, hey, pick me? Yes, I'm on it. No, that comes down to you playing in middle school, you playing in high school, you playing in college. And not only that, you are again going the extra mile in high school, staying late, doing summer practices, doing workout sessions, you in college, asking coaches for extra help, everything along those lines. Where in stock trading do we think that we could just say, okay, I'm going to be amazing at this? You are going to stink when you first start. Maybe not the best way to open up this boot camp to say you're going to stink, but it's true. I was awful. I was absolutely awful. I've been able to make over $1 million in the stock market. Last year, I was able to make over $551,000. And the thing is, team, I was awful when I first started. I'm just being straight up with you. But everyone's bad. Just like everyone is bad at everything when they first do it, but you got to work through it. So, before you even go live with your stock trading, you must have 3 months of successful paper trading in a row. That means if you win in June, great. Win in July. If you lose in July, you're back to zero. Win in August, great. You win in September, great. You lose in October, you're back to zero. You have to get 3 months in a row of successful trading in paper trading. And not only that, it needs to be 3 months of successful trading with how much money you have in real life. I see a lot of people say, hey, Deck, I was able to make $27 million paper trading. And now, again, I'm trading my real money. I can't make $1. What's going on here? And I say, well, how much money do you have in real life? They say, I got $1,500 in real life. And I say, okay, how much money did you use paper trading? And they said, well, I used $1 million account paper trading. That makes no sense whatsoever. Right? That makes no sense. You're not using anything realistic, right? You're not being realistic with yourself in any sort of way. You have $1,500 in real life. Why are you using a $1 million account? That would be the same exact thing as if, let's say you want to join the basketball team and from August all the way till November, you're out practicing and you're doing the right thing, but you're practicing with a volleyball. And then all of a sudden you get to warm-ups or let's say tryouts, and all of a sudden they give you a basketball and you say, what's this weird orange thing in my hands? Right? You use the wrong ball. You use the wrong account size. And the last thing that people always say is, Deck, I can't take my paper trading seriously. I can't take my paper trading serious. The fact that, again, I know it's not real money, that, I don't get, any sort of anxiety or emotions with it. And you need to make your stock trading serious. I always like to give the analogy back to that movie, Apollo 13. Basically, the way you meet the astronauts with Tom Hanks is it looks like they're in space, but they're really in a simulator. But you don't know that at first. And they're sweating and they're trying to figure everything out because they know if they can't do it in the simulator of them being in space, then when they go up in real life, they're going to die. And that's the way I thought about my stock trading. When I first started stock trading, I said to myself, if I can't do this, if I can't grow a paper trading account, well, you know what? My stock trading career is never going to take on off. When I first started, I was beyond dedicated because I was in college at the time. And I said, hey, if I don't do this right now during these years, I'm going to have to graduate, get a 9-to-5 job, work under a boss, make $50,000 a year, be able to have my college debt loom over my head for the next 10, 15 years straight. I'm not going to be in a career where I'm going to be able to make 6 figures, 7 figures a year. And I said, I need to make this work. So to me, I thought about it as that movie, as this is life or death for me. I'm going to live the next 80 years of my life, either going to be able to sit and be content with 50,000 and just accept that, or say to myself, let me do it, take it as serious as possible so I can go ahead and live a life I have now of being my own boss, of clearing $550,000 a year, of being able to make this profit. That's what it comes down to. So take your stock trading seriously. After you do 3 months of paper trading in the green, then start building up your emotional tolerance. So what a lot of people do, which is wrong, is they say to themselves, hey, Deck, I grew a $1,500 account to $20,000 in paper trading. And you know what I say? I say, thumbs up. That is absolutely incredible. I'm fired up for you. I'm always psyched to see you guys win. But then I see them say, man, I lost. I lost right when I started going to real money. And you say, well, Deck, I used the right account size, but I still lost. So what's my issue now? Well, my issue now is, yes, you will now have emotions take you over. Now you will have emotions be able to play where you are trading real money. And no matter what, even though you try to switch it off in your mind, you are going to act differently. Just like, let's say, if you had a crush. If you had a crush in high school or college, or let's say again, in your 20s and 30s or 40s, and you see someone across the room and you wanted to go speak to them, you might say to yourself in the mirror, hey, how's it going? What's your name? Hey, my name's Sean. Nice to meet you. You may repeat that into the mirror a million times and it sounds great. But sometimes you walk over and now your crush is staring at you. And now you got your emotions going. And now you start overthinking. And now you start walking up to her and says, your name's Sean. I like food. Together? Right? And then all of a sudden you turn and you say, man, that is not what I wanted. I practiced so much, but that's not what I wanted. And it comes down to now you have emotion. So what's the best way to be able to handle this? The best way to be able to handle this, team, is going to be building up your emotional tolerance, which essentially is you did the work, you got the experience from paper trading. That's great. But now actually start putting some skin in the game a little bit at a time. Don't go from paper trading 1,000 shares to real life 1,000 shares. Go from paper trading, fake money, to now going 10 shares. Because even with 10 shares, your heart's still going to flutter. You're still going to have that adrenaline pump because now you are trading real money and you are going to stay at 10 shares until your adrenaline disappears. That could take 2 weeks. That could take a month. Stay with at least 2 weeks minimum and then go up to 40 shares. And now your adrenaline's back. Now your adrenaline's back. And guess what? Now again, you're starting to make mistakes again because you're scared because there's more money on the line. And do that for 2 weeks, a month, 2 months. Then go up to 80 shares. Then go up towards 200, then 500, then 1,000. And that's where you guys will start having more success. Because at some point, you're going to look back and say, man, I used to trade 500 shares and I used to be freaking out. Now I trade 2,000 shares where I'm able to make $200 every 10 cents a stock moves. And I'm not, I'm not even, that adrenaline anymore. What's kind of crazy for me is you guys have seen me trade 20,000 shares on a play before. You guys have seen me throw over $500,000 into a stock. You see me throw upwards of $800,000 in a play. Sometimes I'm just like this. And people are like, Deck, how are you not nervous? How are you not freaking out? Well, number one thing is I'm confident. I've been trading for the last 8 years. I know what I'm doing. I have a game plan. And also my emotional tolerance is so intact, so in control. Now, granted, I know you guys see me again like to go a little crazy on TikTok, go a little crazy on YouTube, go a little crazy on Instagram. And I like to do that to have some fun, like to do that to get entertaining. But at the same point, team, it is coming down to I'm following my strict game plan that we've had. So this is how we're actually starting to build. So now you're starting to say to yourself, man, right? I do got to do a lot of work. This isn't just, again, me opening up, a Robinhood account and starting to trade right away. Remember what we talked about earlier. If you want to be a lawyer, if you want to make $250,000 a year in law, it's going to be after 8 years of school. If you want to be a doctor and you want to, again, be able to make $250,000 a year in the medical field, you're going to school for 8 years. Stock trading, you're not going to school for 8 years, but you're probably going to do a good 6 to 12 months of pure education before you start seeing the profits that you want. I say one of the best things that ever happened to me is that I was this kid in college that was broke. I only had probably probably like junior year, probably upwards around like $50 to my name, $100 to my name. I really did not have much money whatsoever. And it was embarrassing that I had to call my mom and be like, hey mom, can you like give me $75? I'd walk down, go to Dollar General, buy again, some noodles or whatever, and be able to go ahead and, have some food for the week. It was embarrassing at times when you're calling your mom as, you're 20, 21 years old and asking for money. I don't want to be that in position. Maybe it's just me. Some people aren't embarrassed by it, but I am. I'm embarrassed by it. I'm embarrassed again that you have to, ask your mommy and daddy for money when you're supposed to be a grown man. So to me, I took that to heart and I said, all right, let me again study and let me figure this out so I can be successful. So we have 3 months of successful trading before we go live. Completion of each folder in the Tradecaster video library. We have level 2 lessons, shorting lessons, entries and exit lessons, candlestick lessons, trend line lessons, support and resistance lessons, chart pattern lessons, you name it, we got it. Right? We have everything that you guys need over on Tradecaster. So make sure you guys are watching. There's 308 lessons available. You are in charge of your account. When stock trading goes great, you want to be able to say, that's all me. That's all me. Look what I did. But when stock trading goes bad, you always say, that guy on Twitter told me to buy it. You told me to get this stock. To be successful, stop blaming others. And start looking in the mirror. Start looking at yourself. Whenever I take a loss, I took that loss because I pulled the trigger on that loss. I am the one who is clicking buy, and I am the one who's clicking sell on my mouse. There's no one else. No one else click buy. No one else click sell. You have to have a game plan with every single stock. And if you are buying stocks based off what you're reading on Reddit, or on Twitter, or some random guy you saw on TikTok or Facebook or whoever with a big following told you to buy a play, you can't expect to follow to success. You can't. You can't follow to success. You must learn how to have success. And there's a big difference in that, team. I always like to give the example. Imagine if I'm Tom Brady and you come to the Tampa Bay Buccaneers and you say, Tom, I've never played football before. Tell me what to do. Because that's essentially what people, come to Tradecaster. They say, Sean, I've never again traded before in my life. Tell me what to do. And Tom Brady's going to lean down on you and he's going to say, all right, this is what we're going to do right here. We're going to run a play. Fake 23 blast with a backside Georgie verse. Make sure you run like your life depended on it. Have a 3-count snap. Make sure, again, you watch the blitz shoot in the A gap. And again, hit the man on the slant. Okay, he's going to be coming across the middle right away. You ready? All right, ready. Break. You go out there and you say, all right, guys, we're gonna be running a 23 boomerang 6. You guys, I don't know. Ready? Break. All of a sudden, you said hike. You said hike. You have no idea what you're doing with the ball, and all of a sudden, you have all these huge people laying on top of you. You're saying to yourself, ow, this hurts so bad. I'm again getting taken away in a stretcher. Not only are you getting taken away in a stretcher, but people are booing you. They're throwing a hot dog at you, saying, never come back here. You stink. And what are you doing? You're laying there and you're saying, oh, you told me to run that play. Well, is that really, again, Tom Brady's fault? No. Tom Brady says, have you ever played football before? No. Do you know what this play is? No. Do you know how to throw a pass? No. Do you know how to, again, read a defense? No. So the thing is, I never want you to follow me to success. I want you to watch, I want you to learn, and I want you to trade beside me. Not behind me, beside me, so that we can be able to grow together. And that's something that's so important, right? So I'm going to be very direct with you throughout this entire boot camp. Right, so we already talked about this a little bit, but what is paper trading? Paper trade is a simulator trade that allows investors to practice buying and selling without risking real money. Today, most practice trading involves the use of electronic stock market simulator, which looks and feels like an actual trading platform. So crucial to success. I paper trade for 11 months before I had any sort of success. And 11 months, that is, one of the best things that I ever did. And as I talked about before, I didn't have much money when I was in college. And I like to say one of the greatest blessings was me being a broke college kid. I'm being straight up with you. I'm being straight up and honest. I would have 100% traded before I was ready if I had money. I was in love, passionate about stock trading. I still am, of course. But the thing is, when I first started, if I had $2,000, $3,000, $4,000, I would have traded it right away. No doubt in my mind I would have. But the fact was, I didn't have money. So I said, well, let me do the work until I have the money. And it wasn't until about 7 months in, 8 months in that I even had the money to start trading. And then, of course, I was paper trading. I've learned a lot more. I've been able to figure out the market. And when I started getting money, that's where I was more involved and ready to go. But it's so tough to want to make money and know that you have maybe 2, 3, 4, 5, 6 months of work ahead of you before you even see a dollar. But let's think about it again. The career path of a lawyer and a doctor. If you're going on Wall Street, it's going to take you some time. So where can I paper trade? I always suggest paper trading on your brokerage. That's really the best thing, team. I don't want to, again, be able to be like some affiliate right here and just trying to make a quick buck and say, go paper trade on this platform or go paper trade on that platform. Really, paper trade on your brokerage. It would be like if you're a race car driver and you're driving your car in another race car. Well, that's not going to be the same feel. Practice in your race car. So when it comes to race day, you know exactly how this car is going to run and how it's going to work. I'm not going to tell you, go again, trade on this platform for simulated trading, and then you go and trade on your broker, and the buttons look different. It has a different layout, a different format, it's a different feel. When you go to real life trading, the last thing that you want to do is be concerned on how to buy and how to sell. You want to be focused on your stock. You want to be focused on your trade. You want to be focused on the price action, not trying to figure out and trying to worry, oh, how do I get out of this trade? So make sure on your paper trading, you learn all about your brokerage, because that paper trading brokerage is going to be the same thing that you have in real life. That's what I want you guys to do. And it's very important you stay with your broker throughout paper trading to real life trading. So what are the best brokers to use? Well, some of the best brokers that you are wanting to use are going to be Centerpoint, Lightspeed, Cobra Trading, Trade Zero. E-Trade and TD Ameritrade are acceptable, but are not highly recommended for day trading. I do think they're great long-term investing plays. I think they're safe and good, credible brokers, but they're not really the best day trading broker. Same exact thing with Fidelity. Same exact thing with Schwab. Same exact thing with some of these other, very popular brokers. They're not always great for day trading. Day trading, we want a brokerage that is quick and fast, has a lot of shares available to short. And those plays are going to be Trade Zero if you have $10,000 or less. If you have $10,000 to about $25,000, you'd want to use Lightspeed. If you have $25,000 up towards around $30,000, you might want to use Cobra Trading. Or if you have $25,000 up, you may want to use Centerpoint. Centerpoint's what I'm currently using right now in 2022. Last year when I made over $500,000, I was using Lightspeed. And again, we like Trade Zero, even though that sometimes they do have little glitches here and there. They are one of the best brokers that does have the most amount of shares available to short for smaller accounts, which is one of my go-to strategies, shorting. And I do think it is awesome to be able to have shares available to short on the majority of plays. Nothing's worse than seeing a stock go on a huge spike and you wanting to short it, which basically means you make money as the stock falls and a broker not having shares available to do that. And E-Trade and TD Ameritrade and Fidelity or Schwab usually don't have a lot of shares available. So we will learn more about that, but that's just one of those things that a lot of new traders don't know. Certain brokers do personalize in certain things such as day trading or long-term investing. Now, what are the best scanners? The scanners that I use are Trade Idea scanners. Trade Idea scanners are the scanners that you see up on my screen. They're custom coded. If you guys would like the codes, you guys can go to the scanners page on Tradecaster and be able to get the same exact settings that I have. I also use scans as my news streamer, and there is a TC2000, which is also on that scanners page, which again only comes down to about like $5 a month. So I understand that not everyone has money to be able to throw around. And I know sometimes it also builds on up. When you have, let's say, you're here on Tradecaster and you have trade ideas and you have scans and you have this and you have your brokerage fees and then you have this and that over on your normal account, I can understand that sometimes things add up. $50 a month, $100 a month, $100 a month. You could be saying to yourself, man, right now I'm not even trading. I'm not even making any money yet. And I'm already spending $200 a month, $250 a month on these scanners and things along those lines. But it's worth it. If I didn't have certain scanners and certain setups, I wouldn't be able to make $5,000, $10,000, $20,000 a month. I'm basically putting in $100, $200 a month to be able to make $20,000 a month. That's how you have to think about it, and that's how you have to think about the investment. Same exact thing with Tradecaster. A lot of people are here every single day. Tradecaster costs $3 a day. $3 a day, and I tell you, of course, what are the best stocks, what are the best plays, what are the best options. You spend $3 a day to make $250 a day. You spend $3 a day to be able to make over $5,000, $10,000 a month. It all comes down to putting in perspective and understanding what the value is giving you so you're able to make more money from it. And that's why I spend my money on these scanners and these different things, so I can be able to make a lot of money. You got to be able to put in a little to be able to get more out of it. So make sure you guys are using the correct scanners, and I can post some links for you guys that will give you guys some discounts after we're done with this lesson. So something that is also extremely important here, team, is going to be tracking your trades. Tracking your trades, so important to do. And this is a free trading log. I did send this out last week. I will send it out once more again today for anyone that just signed on up over the weekend. But this is a free trading log. And essentially what this log is going to be is just a great way for you to be able to review your trades. Professional athletes film themselves trading every day. And not trading every day. I would say, again, playing their sport. They film themselves. If they're a golfer, they film their swing. If they're a basketball player, they film their shot. If they're a football player, they film their throw. And they film themselves on game day because they want to see what they look like. It is so important to track your trades and to be able to figure out where your strengths are at and where your weakness is at. Not only is it important that you track your trades, it's super important that you record your trades. So every single person should do this. You guys should go over to www.google.com, type in OBS, which is Open Broadcast System, and just download Open Broadcast System. It's 100% for free, and this is just going to record your stream. It's going to record your screen every single day, and you can rewatch it later on in the day. And that's so awesome. And that's so great to be able to do because so many of you guys are going to make mistakes in stock trading, and you're not going to realize what you're doing wrong. So many of us. We're going to do that all the time. We're going to make mistakes stock trading, but we're not going to realize what's the issue. We're not going to realize what we're doing wrong. We're not going to realize what our main problem is. How sad is that? And that's because we're not going over our trades the way we should. Team, I talked about this a little bit earlier, and I don't mean to sound unprofessional here, but there's a lot of us here that are over the age of 21. We might be 22, 25, 30, 40, 50. There is probably a point in your life where maybe on a Friday or Saturday night, you maybe had a little too much fun. You maybe, again, were drinking a little bit, and you, in that exact moment, you said, I'm fine, I'm good, I'm good, right? But the next morning when you wake up, you say, man, I wasn't fine. Man, I was a little, off the charts last night. But in the exact moment, you say you're fine. And it's not until later that you say, phew, man, I was a little gone last night. Right? And I'm sure, the majority of people have been there at some point in their life. But what do? We learn from that. In stock trading, I can't tell you how many times you essentially are drunk trading, where you're sitting there and you're holding onto a trade and you're saying, I'm fine, I'm okay, this is no big deal, I'm all right, this will work out. And then guess what? You end up taking a monster loss. And that's never what you want to do. That's never what you want to see happen, because that's where, again, you start getting yourself in the most amount of trouble. Don't be a person that is saying, I'm fine, I'm okay. Because when you record yourself and you watch it back later on that night, you're going to say, man, that is so brutal. What was I thinking? What was I doing? What was I putting myself in that position for? So it's great to review your trading and to say, man, that's not the person I am. That's not who I want to be. That's not how I should act. And be able to learn from your stock trading. That's where you guys are going to be more successful. Okay? So let's keep going on even more here. And if we keep going through this even more, let's talk about that trading journal, right? So trading journal, here are some columns, right? We're going to have expectancy, total P&L, trade number, long or short, quantity of shares bought, sold, initial risk. If you guys want to, you guys can just pause the video right here and you guys will be able to get everything that goes with this list right here if you don't know what a certain column means. So this will be emailed to you. Track your trades, organize, see your strengths, learn from your weaknesses, and shows progress. Also in the stock trading world, you are probably going to want to be involved with a community such as ours on Tradecaster and in a chat, not only on here, but on Twitter, on StockTwits, on Reddit, wherever. You guys are going to see a lot of stock trading acronyms. These are going to confuse a lot of traders. You might see people say Tesla, HOD, stands for high of the day. That essentially is saying that Tesla just hit a high of the day. Someone may say Tesla $1,000 EOD, at the end of the day. ON overnight. Simply enough, we know time is money. And we don't want to take the entire time to write something out. Just like you guys say BRB, be right back. LOL, laugh out loud, right? It just comes down to these are stock trading acronyms, not really like, poppy MySpace acronyms, okay? So make sure you guys study this list as well, because this is what you'll see a lot of times in the chat room and throughout, again, a lot of stock social media boards, and I want to make sure you understand what someone may be speaking of. Now, let's begin. Let's dive into stock trading. We kind of talked about expectations. We talked about how we should start as stock traders. We talked about how we should really be able to grow and become a professional stock trader. But let's have a big open discussion here. Big open question. When you think of the stock market, what comes to your mind? Does numbers come to your mind? A whole bunch of math, different graphs, money, maybe the importance of being a stock trader, maybe just pure confusion, maybe different indicators all over the lines, right? Right here, stock trading, it doesn't have to be complicated. It doesn't. A lot of the times when it comes down to stock trading, all you need to do is learn the fundamentals, and then from there, you'll be able to build off your strategy. So we're going to learn the fundamentals, and then we're going to build off that and be able to learn our strategy. But I'll tell you right now, team, I have never done one math problem in my life. You don't need to, again, learn any sort of math to be a great stock trader, okay? You don't need to have a calculator right next to you. You don't need to be on the phone with your brokerage. You do everything right in front of you. To be straight up with you, honestly, the majority of stock trading is going to be remembering pictures. We all like pictures. Most of us would probably, again, look at a coloring book rather than read a 500-page, book. Not everyone, I get it. Some people would rather do math, but I'm talking about the majority. Majority of us probably wouldn't want to do any sort of math problems. So everything that I've been trading and everything that I teach is going to be simplified, where we don't need to learn any sort of numbers or algorithms or math or, again, confuse things any more than they have to be. So let's make things simple for us. Now, when we talk about day trading, why was day trading not taught? You may hear about a lot of people on Wall Street, and Wall Street says, we hate day traders. Wall Street hates day traders. And the reason why Wall Street hates day traders is because they were never able to do it in the past. This is something that is relatively new. I remember, I'm 28 years old. I remember when I was growing up, I didn't have the internet. Isn't that pretty wild? That's going to be like such a fun thing to say, I think, when I'm like 85 and I have grandkids or great-grandkids. And I say to myself, they say, oh, Grandpa, how old are you? And I say, I was born in 1993. And they say, 1993? And I say, yeah, when I was born, the internet wasn't even invented yet. I remember when I was 7 or 8 years old, and one of my good friends named Ryan, he actually got the internet. And I was over at his house and we were on the internet, and I was like 8 years old, and I came back home and I said, Mom, Dad, when are we getting the internet? And they said, oh, we don't need it right now. And that was like back in 1998, 1999, something along those lines. The thing is, team, what are we all doing right now? We're all trading on our phones. We're all trading on our laptops. We're all trading on our desktops. This wasn't available when your parents were alive. This wasn't available when your great parents were here. It wasn't available when your great grandparents were here. We're kind of the first true generation of day traders. So a lot of times you may hear, let's say, some older folks or some older crowds that they don't like day trading. It's just because it's newer. Same exact reason on why a lot of people hate cryptocurrencies. Cryptocurrency, I don't hate cryptocurrency in any sort of way. Cryptocurrency, people have made billions of dollars, literally billions of dollars. You can't hate someone who makes money. Same exact thing in stock trading. Stock trading and day trading, you can make money. But the thing about day trading you need to understand is it's high risk. And why is it high risk? Because you have high reward. I can go ahead and throw in my money right now on the S&P 500. I could throw my money right now over on Amazon. I can throw my money right now over on Tesla. I could throw my money right now over on Google. And I can assume over the next 1, 2, 3 years that I'm going to be able to make money. I will. I'll be able to make money. But I probably am not going to be able to make hundreds or millions of dollars. If I take, let's say, $200,000 over 3 years, I might be able to turn that $200,000 into the matter of $500,000, maybe up towards $600,000. That would be awesome. But the thing is, in stock trading and day trading, I might be able to turn that $200,000 into 1.5 million because I'm going to be able to play stocks that are much quicker. So let's learn the absolute bottom foundation of these fundamentals right here, which is, what is the stock market? What are stocks and what are shares? Like what are we even trading at this moment? Because if I had to ask you right now, what's the stock market? What would you say? Some people may have the right answer, and some people may say, I don't really know, again, how to describe the stock market. So the stock market is where investors connect to buy and sell investments, most commonly stocks, which are shares of ownership in a public company. And after you purchase your first investment, you'll join the ranks of investors around the world who are using the stock market to build long-term wealth. Stock markets are where individual and institutional investors come together to buy and sell shares in a public venue. Nowadays, these exchanges exist as electronic marketplaces. Share prices are set by supply and demand in the market as buyers and sellers place orders. So, what's the stock market? The stock market is a place for investors to buy and sell shares in companies. So it's where we can essentially go on the internet, where we can say, hey, I want to purchase shares of this company, which means I'm going to have partial ownership in this company. And if that company does well, I am going to receive a payment from it. So that's what a stock is. A stock is going to be essentially a company on the stock market. A stock is also known as an equity. It's a security that represents the ownership of a fraction of a corporation. Stocks are bought and sold predominantly on stock exchanges through their private sales as well, and are the foundation of many individual investors' portfolios. How do stock works? Companies sell shares in their business to raise money. Then they use that money for various initiatives. A company might use the money raised from a stock offering to fund new products or product lines, to invest in growth, to expand in their operations, or to be able to pay off debt. So let's think about it right now. We have the stock market. The stock market is where we're going to have over 8,000 stocks available for you to be able to buy. And a stock is going to be a business. So essentially, we have a marketplace where we have over 8,000 businesses that you can choose from on which you want to invest in. And if that business does well and the business starts making money, you can make money from it as well because you gave the company some of that money. So you're giving the company money, they're going to be able to be worth more, and they're going to take that money and basically work on their products, trying to get more customers. And if they get more customers, if they get more revenue, you get part of that money. So what are stocks? Stocks just means that you are going to have a company right here. You are going to be owning partial of that company, which does come down to the shares. So the shares are units of that ownership, interest in corporation that exists as a financial asset, providing for an equal distribution in any residential profits if you are declared in the form of dividends. Shares represent equity stock in a firm, that the two main types of shares being common shares and preferred shares. So what does that mean here, team? I know that may have confused you for a second. Let's start breaking it down one more time. Essentially what we have here, team, is we are going to have the stock market. The stock market is a place you can buy and sell stocks, which are basically companies. Now, when you buy or sell a company, you get partial ownership of that company. And the more money you put into that company, the more ownership you have of that company. So you are going to be buying shares. Shares is basically showing how much of that company you own. The more shares you own, the more of that company you own, which means if that company does well, you make more money. If you only give them $1, don't expect to make much money. If you give them $1 million, expect to make a lot of money. So it basically goes stock market, stocks, shares. Shares are ownership of certain stocks of these companies on the stock market. So it's basically those three things right here. So how do we make money in the stock market? Well, how we can make money over on the stock market is, let's imagine this is you right here. Happy little camper, good looking guy. And what we have is we purchased this stock. We purchased this stock for the price of $23. And let's draw this out right here. So this is going to be stock ABC. And we have you right here. And you say, hey man, I really like stock ABC. I see ABC starting to move its way on up. And you say, you know what? I want to buy in on some ABC. I have some money in my bank account. I want to buy in on ABC. And you buy in ABC at the price of $23. Okay? You buy in at $23 over on ABC. And guess what happens throughout time? Throughout time, ABC starts moving its way on up, starts going up higher and higher and higher, and gets all the way up towards around the price of $31. Now let's remember, you invested in this company at 23 bucks. That's when you invested in this company. So your shares are worth the $23 mark. That's where you got in. But now the stock is all the way up towards 31 bucks. So if you wanted to sell your shares, you sell them at the current price of $31, and you are essentially just going to be making money from the difference from where you got in at $23 to $31, which would be, in this case, that $8 profit. But let's say you invested a lot of money. Now that $8 profit may be $800 profit. Maybe you invested more money. That could be an $8,000 profit. That could be an $80,000 profit. Who knows? It all depends on how much money you invest. But simply enough, when you buy shares and the stock moves on up, your shares that you bought down low are now worth more. And that's how you're able to make money in the stock market. So let's go over some stock trading terminology, some things that we want to understand about the stock market and how the stock market truly works. Well, essentially, when you hear the word buy is to take a position by buying shares of a company. As a trader, you generally buy shares when you think the stock price is going to rise. When you believe a stock is going to move on up, you buy those shares. And that means you're getting involved in that company. You are now an investor in that company. We have sell. Sell, to sell the shares that you currently own. Traders generally sell shares when they see an opportunity to take profits or they think the stock is going to end its rise. Essentially, you want to take your profits when the stock is at its tippity top before it starts heading back on down. Because if the stock starts heading back on down, that's where you can lose money. Now, we also have the word bid. Bid is when a trader in the market makes an offer to buy shares. Traders will bid for a stock at a certain price. So we know we have buy, which means you're buying shares. But what you can do as well, instead of just buying shares where you could just market order in, which essentially means you just take any of the shares available, you can bid, which essentially put in shares at the price that you want, and someone could sell you their current shares at the price that you would like. And we see that on the level 2, which is a very popular tool that you'll be using in your stock trading. So you could place a bid, which essentially means you want to get in on this play, but you only want to get in at this certain price. Now you can also do the ask, which is the opposite. And the ask is when you already own shares and you're trying to get out of that position. But instead of just selling your shares right away, you could put a price on it and say to yourself, hey, if you want my shares, this is what you guys can pay for it. It's essentially like if you were selling a car. Think about it like that. If you were selling a car, this is the price, right? If you were on the bid side, you would say, hey, I got $10,000 right here. I'll take your car for $10,000. And the guy who's selling his car says, hey, well, my car costs $15,000. You're going to have to come up, $5. So basically between the bid and ask, it's going to be like a negotiation on the level 2 on who's going to win. Are you going to come up to the ask, or is the ask going to come down to the bid, right? Who's going to be able to, wiggle a little bit more for that deal and that transaction to be able to happen? Now, what's the spread? The spread is going to be the difference between the bid and the ask. So if someone says, hey, I'll give you $10,000 for a car, and you say, well, my car costs $15,000, the spread is the difference. That means we have a $5,000 spread, right? And that's going to be the difference between the bid and the ask. Now, we're never going to have a $5,000 spread in stock trading. It's more going to be maybe $1. Maybe it's going to be a few cents, something along those lines. But the bigger the spread is, sometimes a stock may get a little bit crazier just because people are putting in big orders or small orders, and we're seeing the stock jump very quickly because we have a large spread. So whenever stocks have a small spread, you do have a little bit more of a contained play. When you have a large spread, sometimes we see more wild moves. So the spread is going to be the difference between the bid and the ask. Now, a bull market. A bull market is a market conditions where stock prices are continually rising. A bull market is when we start seeing everyone buy in and hold, and there's a lot of optimism, a lot of confidence in the stock market. It's when the bulls or bullishness is in control. A bear market is going to be the opposite, something we've seen in 2022. A bear market is the opposite of bull market. It's where market conditions price continuously fall, where we just see falling and falling and dropping, and there's a lot more negativity, a lot more pessimism over in the stock market. It seems like the stock market's never going to end dropping. So we have bull market, go on up, bear market, everything goes on down. We also have the word market order. Market order is going to be a type of stock market that a type of stock market order that provides instruction to buy or sell as quickly as possible at whatever price is currently available. Don't worry, we'll go into a little bit more details on these orders, but market orders are essentially just going to be once you click buy, you're in right away. When you click market order buy, you are just buying that stock right away and you're getting in at the best available asking price. If you want to have a limit order, that's where you'd put in a bid, or again, you would put in your ask where you're basically saying, hey, someone come to this price and I'll sell you my shares, or come to this price and I'll buy your shares. So a limit order is when you get to choose what price you want to get in or get out of. A market order just means you want to buy in right away or sell your shares right away without ever even looking at the bid or ask and just getting out immediately. Volatility. Volatility is going to be the statistical measure of how much stock moves up or down. Stocks that move up and down wildly are known as very volatile stocks. They can provide great profit opportunities, but also come with great risk. So the thing is, we love playing stocks with high volatility. And the next few kind of slides kind of all mean the same thing when we talk about volatility, or we talk about stocks with higher volume, or we talk about stocks with a lot of traders heading towards them. It's because these volatility plays means we could have very big drops and also very big spikes, which is what we love to look for in stock trading. Because remember, we can't make money when a stock is just moving sideways. We have to make money when a stock is going up or when a stock is heading on down. So what else do we have here? Liquidity. Liquidity is going to be the measure of a stock's ability to be bought and sold quickly. More shares being bought and sold means more liquidity, which also means, again, more volatility. So if there are a lot of buyers and sellers trading a lot of shares on a stock, you'll generally find it easier to enter and exit a position. So what this essentially means and how this is different is if you have, let's say, a large amount of shares that you want to buy into a stock. Let's say you want to purchase 10,000 shares of a stock. If you have a stock that doesn't have a lot of traders in on it, you may buy 10,000 shares and that's going to move the play dramatically, where you are actually having the worst entry because you put in such a large amount of money when there's really no one else to sell the shares, where no one else is kind of balancing it out. If let's say a stock is very slow and very dead, and all of a sudden you buy 10,000 shares, that stock may go on a huge spike just from your order. But let's say if a stock is very liquid, where we have a lot of buyers and a lot of sellers, well, you might buy 10,000 shares, but since there's so many sellers, it balances out very well right away. So you are basically getting in on a play without having any sort of complications. So I personally like to play stocks that are very liquid and stocks that are moving, where it's easy to get in and out, and you don't have to worry about any sort of large spreads that are going to make your shares more difficult to get in and out of with a profit. Now, we also have trading volume. Trading volume is the number of shares being traded over a certain period of time. More trading volume means the more active the stock is. It's easier to enter and exit positions. And this is kind of what I talked about with those 3 slides all being together. Trading volume is essentially going to be how many shares are traded on a stock over a period of time. The more shares that are traded, the more volatile the stock is going to be, which means it'll be more liquid. So basically, you could find whichever one you like. You could say, oh, I like stocks that have high volume, or I like stocks with high liquidity, or I like stocks that have high volatility. Whatever you say to a stock trader, they're all going to kind of put in the same manner right here. If you say, hey, I like playing stocks with high volume, you like playing stocks with high volatility. You like playing stocks that are very liquid. These are, again, indicators or basically definitions that would help us understand how fast a stock is willing to move. And if we have high trading volume, we can assume with a lot of orders, the stock is either going on a very strong spike or a very strong dump. Okay? Going long. Going long essentially means you're purchasing the play. It's almost like buying it. When you're saying I'm buying the stock or going long on a play, you are buying low and you are looking to sell those shares at a higher price. When you guys are selling short or going short, you are essentially betting that the stock is going to fall. You are going to be able to make a profit as the stock actually falls down. So going long means you want the stock to go up. Going short means you make money as the stock falls. We'll go into lessons on how to make money as the stock falls coming up later in this boot camp. Averaging down. What does averaging down mean? Averaging down essentially means you are going to be changing your price, right? So let me actually change this out right here and we can understand what we mean by averaging down. So let's go ahead and take a little bit of a picture here. Let's say I'm getting involved in a play, all right? Averaging down, and we could just say, Tesla, Okay, so Tesla's ticker is going to be TSLA, and a ticker is essentially just going to be a four letters out of the company that's going to help us find it in the stock market. So I could say Tesla, TSLA, I can see how Tesla stock is doing. I can type in AAPL, that's going to be Apple. I can type in Amazon, AMZN, that's Amazon right here. So we're basically just having tickers to give a quick little four letter. We can just type it in to be able to see what that graph is. Let's say I went and I see Tesla falling at this point, okay? So Tesla is falling and getting weaker. Now let's say Tesla is currently at the price of $725. Okay, $725, and as we can see at this moment, if we take a look over on Tesla, Tesla is actually at the price of $711. But let's say I bought it at the price of $725. All right, I bought Tesla at the price of $725, and I bought in with just 100 shares. Okay, 100 shares right here. Now, as Tesla falls, and Tesla drops, and Tesla gets weaker, now it's all the way down towards the price of $715. What could I do? I can buy in another 100 shares right here. And if I buy in another 100 shares, now I am averaging down, which essentially means my shares are no longer worth $725. They are not worth $715 either because I have shares at $725. My shares are actually now worth at this moment, they're going to be worth $720. That's where my shares are currently worth at this time. And the reason why they're worth this is because I bought 100 shares at $725. Now I just bought 100 shares at $715. So now guess what happens? Now I have 200 shares at this moment, and the average is going to be $720. So something a lot of people like to do sometimes, let's say again, Tesla has a huge crash. Let's say Tesla crashes all the way on down towards the price of 600, okay? And I have, again, shares at $720. Well, what could I do? Let's say I have money in my account. If I have money in my account, I can buy shares way down here at 610, and maybe I want to go ahead and I want to purchase 400 shares. 400 shares at the price of 610. Well, I have 200 shares at 720, but I'm purchasing 400 shares at 610. This may now move my average cost basis all the way on down towards around the price of 650. Because I'm buying more shares, I'm investing more money at a lower price. So this is bringing, again, my new cost basis all the way down. Now, why would this be good? This would be good because once the stock does start bouncing, I start making money at this point right after the stock starts breaking 610. I don't need to wait until it comes all the way up to 720 now. So averaging down is a great way, but also a very risky way to make money because if a stock keeps on falling and falling and falling, you're basically adding money to a loser position. So it's something that is going to be a little bit more advanced, but at the same time, it is something a lot of traders like to do because once you do get that bounce play, you'll start making a lot of money. Float. This is, again, crucial, and we'll have lessons just on float. But float, this is the term from a company's freely traded shares. Many companies will have large chunks of shares that aren't tradable because they're held by the company's management or key investors. As active traders, we generally look for companies with small public float, as their prices tend to be more volatile. So the thing is, team, with float, the float are the shares offered to the public. It's basically the supply that is out there in the world. Okay? So if we have a very low supply, and all of a sudden, we have a very high demand. The stock comes out with a very big press release. We get a lot of volume, a lot of volatility. The stock becomes very liquid. So float is essentially going to be the supply. Think about the housing market. Imagine the float is how many houses are available in the United States. And then, of course, we have the demand, which are going to be traders or, again, people who want to buy houses. If we have a low supply of houses and a lot of demand, prices increase dramatically. In stocks, if we have a low float and let's say they come out with a very good press release, the price would increase dramatically, which is why we love looking at the float. We have outstanding shares. And outstanding shares right here, this is going to be the total number of a company's shares. It has included both a float and restricted shares held by management or key investors. So this is just going to be the total number of shares, including the float and some of the restricted shares as well, which is going to be held by management or insiders.